Hey, Alpha fam, welcome back to another episode of Alpha Commission and another lovely day in California. Today I've got another good episode for you. We're just going to keep it short and sweet this time. We're talking about the Federal Reserve minutes. Yesterday I was mentioning that all of these YouTubers, they got the dates wrong. They were saying something was going to happen yesterday with the Fed, and then they realized it was nothing. And then some guys were saying that today there was going to be some kind of a big deal. And to be honest, none of these guys, none of these YouTubers, none of these influencers were talking about the Fed, 6 months ago when I was, right? None of them was tracking every step of the Fed for the last 3 to 4 months the way that I was doing. And these guys really have no idea what they're talking about. And so they come out here with all these scary, oh, Jerome Powell, blah, blah, blah. They have no idea what the schedule is for all of these things. And they are just making filler for their videos. But so that's why I felt yesterday I needed to come out and just say that, hey, those guys were wrong. Nothing was going to happen today. And hey, what happened? Nothing happened yesterday and nothing happened today. Although I don't know why dozens of influencers were saying there was going to be some big deal with the Fed. Some of them were saying yesterday and some of them were saying today. Yeah, they released the minutes, but guys, like we already knew what the summary of the Fed decisions were, okay? The Fed, already said that they were going to go ahead and move forward with the 50 basis points for the interest rate increases, right? We already know that. We've known this for a while now. And also, in the Q&A and the session, if you were watching the Federal Reserve speak, they mentioned that, they could possibly move the market into restrictive territory. That is, they may have to be more aggressive than they originally thought. And this is something that's been developing as a conversation, so again, no new news. And of course, they're very hopeful that they can bring inflation down, but they're worried about financial stability of the markets because of, China and their lockdowns and the Russian war against Ukraine and all of these things that are up in the air. They're just worried about it. And so, I mean, you can read this report if you want. I did. Really, there's no new information. And we really shouldn't expect that there was going to be a bunch of new information. I still see some influencers trying to say that it was scarier than, what we thought. But literally, we've known almost every detail about this. And everything that's new is just vaguely worded. So we're going to find out at the next meeting, like I said, in June. And so just pay attention to those things in June. I think probably around June 10th, I believe that's when the consumer, pricing index or whatever is going to be coming out. And then I believe the Fed has its next meetings around the 14th or 15th, right? So let's just see. The CPI for June 22nd would be, let's see, yep, June 10th. Okay, so got that one right. Okay, guys, so pay attention to data on June 10th in particular. That's going to be the most important thing. And then let's go ahead and pay attention to the Federal Reserve uh, meetings in June, which will be, yep, the 14th to the 15th. Okay, so on the 15th, we should be able to get their summary. And as for these YouTubers who are just like talking about the Fed for the first time in the last like week or last 2 weeks, because they're suddenly shocked to learn that, oh, we're not having a bull run the way that they expected, and they're having to learn some new tricks suddenly. They've never had to think about this in the history of crypto, because this is the first time that the Federal Reserve is actually tightening as opposed to being willing to rescue the market. Those YouTubers, I mean, the ones who are just like up only, I mean, they are gonna get you wrecked. And then these other guys who are just BSing their way through all of this information, they're gonna get you wrecked. If you haven't heard these guys talking about the Federal Reserve for the last 6 months, take it with a grain of salt, whatever they're saying, because most likely they have no idea. They probably don't care about that stuff. It's probably really boring to them, and they're probably going to get some of the concepts wrong. Okay? So, what did I call today? That nothing was going to happen today. What did I call yesterday? That nothing was going to happen yesterday. And a bunch of these other guys were saying, oh, watch out for some really volatile moves in the market. Yeah, let's take a look at the market. Oh, look, nothing. Okay. Yeah. So again, like those guys, they don't know what they're talking about. I love them to death for their entertainment value. They're better entertainers than I am. But let's just face it, some of them have no freaking idea what they're talking about, and they should probably just stick to charts. But if we look at the stock market, again, we're just printing this kind of pattern that I suggested might be possible. I mean, we could literally dump from here if there's some bad news in June. Um, but I think everyone is pretty hopeful that we get some type of relief bounce, before any type of bad news might come out. Of course, we're not psychics. There's no crystal ball to just tell you what's going to happen. The best thing that we can do is understand that we've now tested this bottom once, twice, 3 times. We did find some slippage below, and that does suggest a weakness that might bring us down later on. But overall, we have kind of put in a nice support here, which could be a temporary bouncing point until, just something else shakes the market, like some more bad news, right? So let's just keep our fingers crossed, and maybe we are at a good bounce point, and let's see how the markets react, in the coming week, right? Or at the end of this week. And again, I'm still trying to just, have that conceptual analogy with the 2nd of February, that kind of January to February transition, where although it was kind of an uptick in price regularly, we also saw something very similar here in December, where we had a pop up, and we had a pop up here in February. So, can we get one of those? I think that we do have the pattern. If I look at the indicators, it's not as strong as I would like. Pardon me. It's not as strong as I would like, but we are seeing some very similar patterns still being put in all the way until the 2-day, all the lower time frames, and then the 2-day. But around the 2-day, it starts to break down, and definitely by the weekly and the monthly, we're just talking about totally different animals. So you can see on the monthly that that bounce area really just dumps, right? So the analogy breaks down on these higher time frames, and we just can see the macro pattern of just raw dumpage, right? So I wouldn't really necessarily expect any long-term recovery out of this. I can just see a pattern of us like continuing down for, perhaps a month or two. Look at this downtrend. It started here in 12/17, and it continued until 3/19. That was, it was like what, wow, was that 2 years? So, yeah, so 18 to, well, at least a solid year, right? At least a solid year. And so where are we here for, uh oh wow, we've had like a, yeah, but you can consider this peak, right? So I guess we could go for a year. So it could potentially go until the end of the year, you don't know, like it's done it before. But most likely, if we just consider this diagonal as something uh just kind of analogous. Don't just take it with a grain of salt, right? It's just screwing around here. But let's just say that we do have this kind of max to this minimum, and it takes relatively similar amount of time. Then we could be talking about maybe end of the year 2022 until this thing bottoms out. Now, this does seem to be falling faster, so perhaps it does hit the bottom sooner than that. Or perhaps we have like one of these curves in the middle, but we're just not seeing that right now, right? So, would I personally plan anything in terms of like a really mega bull run until the end of the year? Probably not. And let's see, what do these other, indicators say here? Let's take a look. So, yeah, I mean, you can just see, like, we're just in free fall, right? I'm not sure what to make about this monthly volatility. This could just explode to the downside as easily as it could explode to the upside. But then again, it could also hold for multiple months. See, this crossed over here at 7. I mean, 7 2020, and then it only exploded at 10 2020. So, there was a good 3 months in between where, if we go and look at the chart, from 7 to 10, right? Where there was this kind of holding pattern right here, right, at the bottom. Does that suggest that we could go up? No, that's actually direction neutral. It could be down or it could be up, or it could be sideways. But the key point is it just kind of like held sideways, and you can kind of see this, like this price and this price, they're pretty much the same thing, right? But yeah, so it means that you're probably that is interesting. It seems to go along with consolidation. Let me look at this chart. Yeah, and here we actually have failures where it just continues to go down. So this was a fake out in 2005 and then another fake out in 2016. And this was kind of a fake out. But you can see that we may not have some type of massive explosion just because that volatility is building up. It could just be consolidation and delay, and they could be a bunch of fake outs or turnarounds. So perhaps the monthly really isn't a good indicator. Uh, this this looks more interesting. Yeah, the 2 week is looking more interesting, but hmm, yeah, I'm not sure, not sure what to make of that on the higher time frames, but it does look like we're not done yet, at least. So let's just take it on the daily, at the current time because we still have the possibility for some type of a run, maybe 10 to 20%. So again, that 32 to $35,000 range, and then depending on if we can break above 33,000, we can take it from there to see if there's any kind of a bullish indication. But right now, Yeah, right now we do seem to have the possibility to pop up. I mean, yeah, I mean the possibility's there. How's the 2-day? That's okay. Okay, 3 days fine. 5 a day. Well, maybe 5 day is just not a consideration right now. So we really are just talking about these kind of a shorter time frames, and maybe we could see something this week or perhaps early next week. But anyway, it looks like if we have our chance to pump, it's going to be relatively soon, and then the market is going to pick a direction. Okay, and that maybe that corresponds with the Fed decision in early June or mid June, or maybe it corresponds with the CPI data in June 10th. But we'll see. There does seem to be some very borderline, very borderline action here. I wish it could be more definitive, but we've just been playing this range, just been playing this kind of channel here, and you can see it just continues to carve out. You literally could have just bought here, sold here, bought here, sold here. Maybe you missed your buy there, but uh, so you probably didn't get that run, but you could have buy there, sell there, buy there, sell there, buy there, sell there. I mean, what a beautiful channel this has been, right? Just have your stop loss here, and then if you're shorting, the same thing, right? Just up here. So, guys, I'm just going to keep this short and sweet, like I said, and I don't really see too much interesting going on. Not really sure why everyone was in a tizzy and panicking and blah, blah, blah. Hmm. So right now I'm looking at the CME chart. Yeah, I mean, this is all just borderline. I can still see room to pump, but it is borderline. Yeah, I'm still going to lean in the direction of us pumping. But I'm still very much aware that we could have kind of a fake out drop first. So if you notice me thinking a lot, one thing that I'm just considering is that the setup would really allow for a kind of like a 10% drop and then potentially a 20% pump, right? Something like this. So what would be 10% down? Something like 27,000. So potentially we could see, that kind of drop, kind of like a check mark move being put in. And as long as we really didn't break too much below that, I could still see the potential upside. The only problem is that we're going to start breaking some of these numbers and turning around our indicators if we get below 28,000. So, well, some of these are saying 26,000. So that's good. But this, mm, okay, so maybe, yeah, it's really hard to say because this is such a weird area in the chart. Like if you look to the left, there's really not that much to understand the price action over here. There's literally just these like two candles, right? Or on the daily, there's like a CME gap here, right? And then there's, you know, like three daily candles. So, you know, it's very tempting to just say like we could very easily just fill the CME gap and then pop up, or just check back here. Yeah, 27 would be very similar to this wick. There's just like nothing. There's just no indication of what we could possibly do in this area. If we break down, I mean, there's just like anything could just keep pushing us down. That's the problem. Like we could just keep falling. There's literally like no good support in this area. So we could just keep falling down. But so that pump really does have to take place, and we really can't lose our footing. So if there's going to be a fake out down, then that better be very well supported because, by market entrance or money, market maker money or something, because we could just continue to fall and that whole move might just disappear. Something like this, right? Like where we fell down, consolidated, and yeah, there was a chance to pump, but what happened? It just continued to dump down, right? Not sure why I can't see the rest of my chart here. Come on. Come on, TradingView, where's the rest of the chart? The heck? Oh, is that where CME chart ends? 2018? Okay. So yeah, same thing here. In 2018, there was just these like couple of candles back here, and when it lost that footing, it just continued to fall, right, until it hit like these areas. So like again, if we lose that footing right here, just there's nothing really to support us until 23,000-ish, right? I mean, maybe this 26,000 area, $27,000 area, and it just better get a nice bounce. So yeah, guys, I wouldn't put a lot of risk into this area. I'd rather see the turnaround first and then get into it rather than just guess. Like normally, if we fell, then that would be a good place to buy in. Like if you bought here, you could have sold up here. But the problem is that I don't know how strong demand is right now. So if we lose that 27,000, then all of even the daily, time frames, less than 1 week, they're saying like we could just continue down. So that could be a pretty hard tumble. I'm just repeating myself because I'm thinking about these things. But all right, guys, that's your alpha for the day. Stay safe and happy trading.